First, liabilities. The liabilities indicate the legal obligation to pay to the specific person or entity a certain sum of money. What is liability? Liabilities indicate the legal obligation, means you are legally liable to pay either to the specific person or an entity. Entity means a business. A certain sum of money means when you are liable to pay something, mostly the money, either to the specific person or to the business entity, that is a liability. And the liability is divided into part: long-term liability and short-term liability. Long-term liability are those which means you are liable to pay for the more than, means normally the long-term liabilities means more than 12 months, and short-term means less than or equal to 12 months. So long-term liability means when you are liable to pay for more than 12 months, that is the long-term bank loan, debenture, etc. And the short-term liability means those which is for the, means for the short term period, that is at least 1 year or less than 1 year. Bank loan, whenever you take a loan, then you need to pay it for more than 12 months, right? More than 1 year. And debenture means the when the company needs the money, then they take money from the public issuing debenture, that is the liability for them. And the redemption period of debenture may be for more than 12 months. And short term liability means the creditor, when you buy the goods from the credit uncredit and bills of payable, etc. Assets means the economic resource of an entity. What is assets? Assets means normally what is you own, something that you owned. You are not liable, you own that resources. Whenever you want, you can use them, right? They are the assets. Current and non-current assets. Same as current assets means less than or equal to 12 months, but non-current means more than 12 months. The current assets are those assets which can be converted or can be used, which are be converted into cash or can be used within the period of 12 months, that is a closing stock, cash in hand, etc. But non-current assets are those which cannot be used or which can be easily converted into the cash, right? Which are the long-term existence, which are the long-term useful life, that is a non-current assets. Machinery, furniture, goodwill, etc. Receipts. Inflow of the cash for any reason may be called as a receipt. Means whenever there is an inflow of the cash for any reason, either maybe from the goods sales, or either maybe from the service providing, or either maybe from the any reason, but there is an inflow of the cash, that is a receipt. Receipt is divided into two part: capital receipt and revenue receipt. When the receipt arises not due to the normal activity of the business, means normally you are selling furniture, you are the dealer of the furniture, and whenever you sell the furniture, that is a receipt for you. So it is a normal activity of the business, means the receipt that you received from the selling the furniture, that is a normal receipt. But what is capital receipt? The receipt that is not due to the normal activity of the business. The cash inflow caused not by the normal activity of the business is called capital receipt. Example, sale of asset means when you sold the fixed asset. You are the furniture dealer, but you had a tractor, right? You are the furniture dealer, and you are selling the furniture. The revenue arises, that is a receipt. But you had an old tractor and you want to sell it, so now you are selling the tractor. That is a, what is that? That is not a, the revenue is arising. The inflow of the cash means that there is an inflow of the cash, but it is not a revenue receipt, it is a capital receipt. Life membership fees receipt, etc. Revenue receipt means the cash inflow caused by the normal activity of the business is called revenue receipt. Example, sales of good, interest receipt, etc. Means whenever you, whatever the business you are dealing in, and whenever you sold the goods you are dealing with, and there is an inflow of the cash, that is a revenue receipt. The simple thing is, there are two kinds of receipt: revenue and capital receipt. What is revenue receipt? The revenue receipt means inflow of the cash to any reason. Because of any reason there is an inflow of the cash. But how many kind of receipt are there? There are the two kind of receipt: revenue and capital receipt. If the receipt is arising due to the normal activity of business, means you are normally doing the business of that only, and there is a receipt, there is an inflow of the cash, that is the revenue receipt, because you are the doing same business and you are getting the money. But if there is a receipt but not due to the normal activity business, there is a receipt but not due to the normal activity of business, that is a capital receipt. So revenue receipt may be more than one time, but capital receipt may be once in a year or maybe not. Capital receipt maybe in once in a year or not, but revenue receipt means because you are doing the business of that only, right? So that is a revenue receipt. Simply, how many kind of receipt? There are the two kind. Expenditure. Expenditure is incurred when any asset or service is acquired. Means whenever you want any kind of asset or whenever you want to service. For example, you want to buy house. So you want to buy a house and you are acquiring the asset, but you need to pay something, that is the expenditure. How many kind of capital expenditure? Revenue and default revenue expenditure. What is capital expenditure? Purchase of house, purchase of machinery, purchase of furniture. They are the capital expenditure. They are the nature of capital receipt. Capital receipt, right? And the revenue expenditure means depreciation on assets or salary paid, depreciation on the assets. They are the revenue expenditure. And deferred revenue expenditure means advertising campaign expense. So mostly we will be speaking about like what is expenditure. Expenditure means whenever you want to acquire assets or service, there is a outflow of the cash, it is expenditure. Revenue means inflow of the cash and expenditure means outflow of the cash. And likewise the expenditure is divided in three parts: revenue, capital, and deferred tax expenditure. Deferred tax expenditure is important, not important that much, but the main important ones is capital expenditure and revenue expenditure. What is capital expenditure? Capital expenditure likewise the same. If there is a purchase or if there is an expenditure that is related to capital nature activity, that is a capital expenditure. But if the expenses is done for the revenue nature things, that is a revenue expenditure. What is expense? The part of expenditure expiring in an accounting period represent expense. Part of expenditure expiring in an accounting period represent expense. Expense means same. Expenditure and expense is a short form. Like normally you are paying wages, you are paying salary, that is the expense. And the income means money or money equivalent earned during a particular accounting period, thus increasing the total of the currently yielding asset is equal income. Amount received on the sales investment. Whenever you do investment, you receive something, dividend, or you may receive money. Whenever you do investment, like you are doing debenture, you are investing in debenture, right? You are buying the debenture of any company, then you receive interest, that is the amount received. Whenever you are selling something, that is income. Income and expense is not mislead. Simply saying that expense means what you need to pay and income means what you are gaining. Profit means when the total income exceeds the total expense, the surplus known as profit. What is profit? Whenever the total expense, whenever the total income, whatever you are receiving, is more than the total expense, than the difference, that is the surplus, that is treated as profit. There are two kinds of profit: gross profit and net profit, which we gonna deal with afterward in the trading account and profit and loss account. Losses means when the total expense exceeds the total income, then the deficit is known as loss. Simply, purchase means acquiring the good or service. For the purchase, for the purpose of the sales may be termed as purchase. Whenever you acquire the goods and service, and for what the intention is to sell, that is a purchase. What is the intention? The intention is to sell. You are acquiring the good and service for the intention to sell, that is a purchase. And sales means the transfer of the good or service in a sale. And you are transferring, or you are goods or service, that is known as sales. How many kind of sales there are? There are the cash sales and credit sales. You are selling the good in cash, that is a cash sale, and we are selling the goods in due. You are not receiving the money for the good that you are selling, that is a credit. And extra point is net sale. When you net sale means gross sales minus sales return. So the simply term is expense means the amount that you pay, and the income means the amount that you received. Profit means, of course, whenever the income is more than the expense, that is a profit. Whenever the income is less than the expense, that is a loss. Purchase and sales. Purchase means either maybe the goods and service, but with the intention to not for using, but the intention to sell, that is a purchase. And sales means to sells the good, right? To sells the good, transfer of the goods, or transfer means to transfer or to sells the good or service, that is known as sales.